Well, welcome everyone. Thank you for joining us today for Business Insurance Bonding and Developing a Safety Program. With us today, we have Jose Suarez. Jose is a risk management consultant with Assurance, a Marsh McLellan agency where he specializes in business insurance and obtaining bonding capacity for disadvantaged women and minority-owned construction companies. Jose has over 17 years of insurance experience, and his clients consist of general contractors, subcontractors, architects, and engineers in the construction industry, with an emphasis in public, private, federal, and street and road projects. As a risk management consultant, Jose fosters relationships with his clients to fully understand their company's specific needs and risks. Jose was born and raised in Chicago, is married with 2 children, and in his time off, Jose enjoys traveling, long distance running, and completing triathlons. Welcome, Jose.
Thank you, Natalia. I wish I had more free time. Unfortunately, it's busy season now in construction. So thank you for having me. I'm going to share my screen just so that we can get the content and everyone can follow along. So let me know if we're good to go, Natalia, if we can see this,
Yes.
and then I'll kick it off. Awesome, great. So as Natalia mentioned, I'm a risk management consultant with Assurance. We specialize in construction, and we've been in business since 1951. If anyone's familiar with a company called Plody was our first construction company. And then just a little bit of an overview of our construction team. We've got about 80 different professionals, all geared towards construction. We do have an internal safety team, which is why I want to talk about safety today and kind of the tips that we give our clients to implement their safety program. 59 years in the construction industry, over 40 different workers' comp carriers. We do OSHA training. They're free of charge for 10 hours, 30 hours. Anyone needs their OSHA card. Over 650 clients, 250 millions in premiums placed annually, and all of our staff, all of our operations and our service team have their construction risk insurance designation. So that's a little bit about Assurance, about what we do. And I specifically work with companies that are either working with the Department of Transportation, the Tollway, federal projects, and I would say 99% of my clients are either DBE, MBE, WB, or veteran-owned businesses. So that's the space where I'm familiar with, and I'm very excited today to talk to everyone about my expertise in insurance, bonding, and the safety culture. So industry focus at Assurance, we help general contractors, we help specialty subcontractors, both on the commercial side and on the residential side. We do have experience with environmental, with pollution liability. Anyone doing underground work, utility work, we can also help there, and we can also help real estate developers, owners, things of that nature. We are an insurance broker, which means that we have contracts with different insurance companies and we can provide the best type of program needed for every specific company. Every company is going to have a different need. They're going to have different customers, so it's important that your insurance program is tailored to your specific needs. So when we talk about construction, we talk about risk management. What kind of things are construction company owners, what keeps them up at night? And there's a lot of things that keep up construction owners up at night. We have safety challenges. You have the risk of a claim occurring on a job site. We have a hot topic right now. You're increasing material cost, with material cost fluctuating from month to month. Big increases coming from one year to the next. So how do you take those changes and implement into your company? How do you reduce costs elsewhere to make up for additional costs in other different areas? You have the labor and skill shortage. So I think the last article I read was about 500,000 or more of missing labor force for construction within the next 5 to 10 years, which is a huge amount of labor force that we're going to need to accelerate, develop, and nurture for the next generation. We also have, when you're either a prime or you're working with, a larger contract, you have subcontractor issues and supplier liability issues. So the construction company owner is, they're under pressure to save money, to save time, competitors, litigation, disputes, the cyber risk. I believe there's another seminar that's going to be speaking on cybersecurity environmental risk, natural disasters, and then COVID-19 to top it all off. So these are the things that construction owners typically have to see on a day-to-day basis. So what risk management is, it's ways to figure out how to manage your risk. And there's three generally ways that you manage your risk. You either prevent the risk, you either pay for the risk, or you minimize the damage of that risk. So to prevent losses from happening, you do it through avoidance, through risk control, through loss control, or loss prevention. So preventing something such as a risk that you're not ready for would be avoiding a project altogether, or avoiding a type of operation that your company isn't quite yet sure if they can take on. So you avoid it altogether. Paying for the losses that occur, this is through reduction, insurance, or risk transfer to other contracted parties. This is the bread and butter of risk management, especially from my perspective. So what we're looking at is, maybe you have a claim and you're partially responsible, but they're trying to get your company to pay for it 100%. So through your help, either through your broker or working with the insurance company, you're trying to reduce any claims that are paid out through reduction. Through insurance, you would shift all of the loss to your insurance company and have your insurance company pay for that outright. And through risk transfer, which is where if you have a subcontractor that you're working with and they caused an accident, and now you're being placed in the position where you've got to pay out for their claims, then as long as you have proper risk transfer in place, you can go ahead and then tender that claim or the losses to that subcontractor. But you need to have the proper protocols in place, which is what we'll get into of how we develop that. And then minimizing the damage caused by losses. That means minimizing. Let's say you've got a worker who was injured, and you're trying to figure out what to do with the worker, how to get him back to work, creating a return to work program, safety. Those are all things that you are trying to implement when you're trying to minimize the damage. So that's the objectives of risk management in a nutshell. As a risk management consultant, my role would be to help on the insurance side, on the risk transfer side, and then also other expertise such as surety bonding and safety programs that we can put together for you. So that's objectives of risk management. Now, when we're talking about risk transfer, especially when working with the Department of Transportation, you're essentially looking at the Department of Transportation, the DOT, as your owner, your prime, your top dog when it comes to any type of risk transfer. So their contracts, their stipulations are all going to be written in a certain way where all the risk transfer is going to flow down. So what does that look like? It's going to be where it's the Department of Transportation, and then you're going to be seen either as a subcontractor or a prime contractor, and then that's going to work downflow. So what that means is, you know, if I've had experience where, you might have a claim and you might say, well, it wasn't my fault. It was, it was someone else's fault. And, you know, the problem is, if you try to file a claim upstream towards it, you've already signed the indemnification agreement. You've already held the Department of Transportation hold harmless. You've given them the insurance certificates. You've pretty much absolved them from any type of claim that can take place, because that's the kind of like the price that you pay to work for some of the primes, the federal contracts. It's their contracts are written in a certain way where all the risk is going to flow downstream. So indemnification agreement is going to be written into your AIA contract. What that means is that you've already agreed to indemnify to make the Department of Transportation whole if there's ever a claim that you file on your behalf of your company. What follows after the indemnification agreement are the insurance requirements. So whatever those insurance requirements are, they're placed there because, number one, you're trying to set up the proper risk transfer so that your company absolves all those risks. And then number two, they want to make sure that your company is equipped with the right insurance so that if there is a claim, it pays out. And now that works both ways, because as a subcontractor to the Department of Transportation, and I hire a sub that's under me, then it's the company's job to make sure that their risk transfer is flowing downstream, so that if that subcontractor ever files a claim trying to go upstream, it stays where it's at. So you ask the subcontractor to hold your company harmless. You want to get the proper insurance requirements. So it's all just about channeling the risk as it should be, um, properly distributed depending on what kind of project you're doing, the operations, and so on. So that's an overview of what risk transfer would look like, and that's why you'll have, I've seen court cases where they've tried to sue upstream, and they haven't been able to do so because they've signed the contract, they provided certificate of insurance. So the judge naturally would say, you've actually you've agreed to hold them harmless, you signed the contract per law, your insurance company is going to have to pay for this claim, unfortunately. So that's something that takes place. And as long as you understand how the risk transfer works, then you'll understand what your rights are and what options you have if you ever find yourself in that predicament. So where do we get into a couple of issues, as far as the contracts that are signed or things that you're looking to kind of clear up with, the Department of Transportation? So you might see, some things sometimes the contract language is out of date, it's ambiguous, it's unreasonable, they don't, whoever is reading the contract doesn't understand the contract requirements. So one of the things that I always recommend to my clients is partner up with an attorney, have an attorney review your contract. Typically most of the language is going to be, status quo, but sometimes there's some sort of contracts that you can push back, and this might not even necessarily be with the Department of Transportation. This might be with another prime, another company that you're working with, that you're trying to, you the contractors see the project amount and their eyes get really big. But sometimes if you just take a look and take the time to review the contracts and work with an attorney, there might be some things that you can clear up, that'll help you, mitigate any type of risk, and making sure things aren't thrown in there that are going to hurt you in the long run and can be kind of taken off the table before anything is signed. Now, when you're issuing certificates of insurance and you're trying to clear up and get the green light to work for the Department of Transportation or any of your owners, your general contractors, your primes, here are a couple of the common errors. Not carrying the proper insurance limits, you're missing coverages. A lot of times, if you're doing street and road work, you might need some pollution coverage. You might need some professional liability if depending on what your trade is. The certificate's not granting the additional insured wording, the waiver of subrogation wording, the primary not contributory wording, and then also the type of endorsements that you're providing for your projects also have to be specific to what the contracts, indicates. And the reason that is because insurance companies, as they move along and as they mature, they start issuing endorsements that start taking away, certain privileges to the contractor, to the business owner, and it starts making the insurance company whole, but it limits the contractor themselves. So you'll see, if anyone's familiar with, additional insured endorsements, there's specific form additions. The older the form addition, the more rights they grant. The newer the form addition, the less grants they write. So some contractors, on the top level would say, we're not going to take some of those newer endorsements. We need the older ones. So whoever your broker is, whoever your agent is, make sure that they understand construction, make sure that they understand the endorsements, the insurance requirements, so that when you are ready to get that, ready to start that project, it'll be a seamless, process for you, because you've got all your ducks in a row, and you're issuing and providing the proper documentation needed to continue to work. So, just an overview of the general insurance requirements that you'll see working, with any of the federal state agencies. Obviously, general liability, workers' compensation, commercial auto, your umbrella, your pollution liability, and some of the other, policies or coverages that might be required are professional liability, your builder's risk, your owner's contractor's protective. So that's like a wrap up, OSIP or CSIP, your railroad protective liability policy, or your executive protection. That's coverage for any key man employees that you have. Um, two of the most common things that I see as far as pushback from any type of contract. Let's say, for example, you are you're working on an interior build, and you're being asked for pollution, and you're asked for professional liability. Well, there are times when that pollution liability doesn't apply because you're not even working with any type of pollution. There's no exposure there. Or professional liability, you're just a subcontractor who's following the chain of command of what services are being requested. So before you go out and ask for quotes for any additional coverages, feel free to always go back first and say, this doesn't really apply to me. Do I really need this coverage? And there might be an internal discussion, and you'll find out that they'll waive certain requirements just because they wouldn't apply and there's no exposure. So it's always good to push back, especially when it comes to different coverages that you don't currently have, because obviously that means an additional cost to the business owner. The other area where you can, attempt to push back is umbrella or excess liability limits. Most of the times you're at a 5 million limit, but there are certain contracts that might require a $25 million limit, a $10 million limit. Now, if your scope of work is very, very small and you're being asked to carry a $25 million umbrella, then there might be some miscommunication there. You might want to go back and say, well, my exposure is very, very small. Do I still have to carry this $25 million umbrella? And then again, there's an internal conversation that takes place with whoever it is that's looking at you, vetting you to bring you on the project. And there's been times, talking from previous experience, where they'll say, even though the umbrella limit is 25 million, we understand that your piece of this contract is very, very small. We're going to okay you to proceed with 5 million. There's been other cases where if it's 10 million, it's 10 million. So then we would have to increase your umbrella to match that requirement. You've asked, they've confirmed, and then you go ahead and you can go ahead and increase that. And an umbrella and excess liability, that's something that can be added at any point for any program. So if you ever come across a contract where the umbrella liability is just way too high, you can always start to have that conversation to figure out, okay, what do I need to do to get that limit, and how much is it going to cost me? And then you can factor in your cost so that when you're getting paid, that's already kind of tailored in to your pricing. So as a broker, my job is to represent a construction company to the insurance companies in the best light. And one of the biggest issues that I have is when working with construction company owners. Number one, they're very, very busy. They're always on the move. Number two, their files might be everywhere. No offense to anybody that's on this workshop. And then number three, it would be where, if I'm asking you a lot of questions, you might say, well, this is just too much information. You're just asking me for too much. This is going to be too time consuming. That's probably the number one complaint that I hear. Now, the reason why, and me as a broker, I would ask for a lot of this documentation is because I want to go back to the insurance company and I want to say, this is a dynamite company. They're making money. They have all the right pieces in place. They have safety. They have risk management. They've had a clean loss history. Look at their safety manuals. Look at their fleet manuals. Look at a copy of their toolbox talks. Look at the subcontractor agreements that they use. Look at the insurance requirements that they're having their subs complete. They have had one large claim in the last 5 years, but since then they've been relatively clean. And we can create a loss summary to help the carriers understand that even if you've had minor claims, they've just been, they've been rectified since then. So a big example is having a large claim 2 or 3 years ago and still affecting your safety score. But you can tell a great story that since then you've hired in-house safety team, you've got a safety supervisor, foremen all have 30-hour OSHA cards. These are things that I would say be at liberty to provide to your broker, your agent, because it would only help them in their cause to get better rates from the insurance company. Now imagine a dial. Imagine a dial from 0 to 100. And the underwriter the carrier, I'll just throw one out there. Let's say Hartford, the underwriter is looking at this, and it's always set to zero. So they're pricing you at the most that they possibly can. Now you start providing some of this information, you start showing that you're a great company, and this dial starts getting to be turned up. And the turning of the dial means the additional credits that are being provided to the company, the additional savings that you're seeing, the rate that's being decreased, because now the underwriter can feel comfortable that this is a great company, it's doing the right thing, it's turning. Now all of a sudden, company A with absolutely no information behind it is being priced here and then high, and then company B that has provided all this information, did all their due diligence, has invested into safety, has invested into their company, their pricing actually can be decreased by just performing those types of functions. So that's why when you're working with your broker and your agent, make sure that you're open. You let them know what your goals are. And now with construction and the market tightening up and rates going up, it's very, very important that you work with your broker way in advance. So these are just the tips to obtain competitive quotes from insurance company. And for savings, just general savings, here's a couple of things based on those risk management tools that you're putting in place. Here are some tips that you can implement right away. Number one, you're using subcontractor agreements, and you let the carrier know this. You have your insurance requirements outlined for your subcontractors. Your contracts themselves are having built-in indemnification, hold harmless language, which is what I had mentioned earlier at the start of this presentation, where if you're working as now you landed a large contract, you can't do it on your own. Now you're going to sub out, and now you're going to be acting typically as a prime. Then you have to make sure that you are carrying that language, and you're having all those subs sign all the agreements as well. So now your risk transfer is flowing down to them, and carriers love that because they know that if there is a claim, most likely it's going to be the subcontractor that's going to have to respond to it. Credits, make sure you ask for credits for having no losses within the last year, within the last 3 years. Hey, you've developed a safety manual, great, send a copy to your broker. Let them use that in their marketing of your program for your renewal. You developed a return to work program, great, let's see what that looks like. You have a employee handbook, let's see what that looks like as well. So another thing is being proactive to solve any customer complaints. Underwriters do use fortunately technology these days, so they'll see what kind of rating you have online, what's your reputation. You also, for your if you're working with a broker and they have access to different insurance companies, ask them, make a choice whether a decision whether you want to see a lot of quotes, or whether you want to wrap up your renewal early because you feel confident, you've got a flat renewal, no increasing cost, you're ready to go. And the most important thing I have to stress is to make sure your website is up to date and reflects only the work that you're currently performing. I've had contractors who've had websites that have shown that they can do everything under the moon. However, they're only performing, maybe 10% of what they say they can do. However, when the underwriter Googles the company, goes onto the website and sees that they're doing 20 different services, they might come back and say, actually, we're not comfortable with everything that they're doing. We were under the impression that they were only doing A, B, C. So I actually had one example where it was a landscaping company, and they had trenching, excavating, erosion, all of these different services. And I go, hey, are you really doing all these things? And they're like, no, we're not doing those things, but we want to let people know that we can do them. And I said, you know what? This is really hurting you. I've had quotes being denied because of all the other services that you're doing. If you're not doing them, just remove them from your website, and we can let the underwriter know, this is what they're doing right now. Only these services. And I spoke to my client. They're gonna revise their website. They're gonna remove that. Lo and behold, they went ahead and did that. Next thing you know, we've got some really, really competitive quotes coming in our way. The underwriter went back to the website, checked, all those services were gone. Only their core services were listed, and lo and behold, we went from a declination to quoted business. So the website is very important. There are eyes on what you do. People are doing their due diligence to make sure that the insurance company is really understands the risk that they're taking on and can work with you in a partnership going forward with that's transparent and honest. So I'm gonna just jump into surety bonds, what they are, the different types that are out there, and how to acquire them. So basically, what a surety bond is, it's not insurance. You would see it more as a line of credit, and a surety bond is a guarantee. So let's say I am gonna bid on a $10 million project, and it requires bonding. So I go ahead and I go through the entire process of getting a bond, and I will go through the items that you'll need. But essentially, what the bond is going to say is, I contractor am going to provide this bond to you, Prime, DOT, Tollway, and if I fail in my task to deliver on the services that we signed in the contract, you can use that bond, and the surety company at that point would then be able to file. If there's ever a file against the bond itself, then the surety company would then, you'd exit out the picture. You'd say, I can't perform this anymore. You'd be out, and then the let's say the DOT and then the bonding company would work together to find another company that can go ahead and finish the work. So it's bonding can open doors, but it's very, very dangerous because bonds are written to a zero loss ratio, which means there should never be a claim that's placed on the bond. And if there is one that's ever placed, it's similar to filing for bankruptcy, where it follows the company for a lot of years, and it can really bring back a company set back a company a few years, just because there's been a bond that has been that's been actually placed a claim on. So that's what a surety bond is. It's just a three-party contract between the surety, the principal, and the obligee. The surety being the company, the principal being the DOT in this case, and the third party being the obligee, being the person that is securing that bond. So can they help you? Absolutely. Surety bonds can help you. They can give folks confidence that your financials are in order, that everything will be paid, that you have a lien-free project. And if you're able to acquire a bond without having to post collateral, they're typically low cost, and they hold you accountable to make sure that the project is done. So as one of the biggest hurdles for DBEs, MBEs, WBEs to grow is their bonding capacity. As your company starts to take on more work, as you start looking upstream, if your bonding capacity is at 500,000 to a million, that's going to exclude you from bidding on larger work. Once you hit that $1 million threshold and you want to go for 5 million, again, you're going to need a strong broker partner to lobby on your behalf to increase limits. But I always tell folks, if you don't have a bond now and you're interested in getting bonding in the future, then at least start with the process now, so you'll figure out how much capacity you can be given, how much is what paperwork you're going to need. It'll give you a better idea of what steps you're going to need to take once you get there. And it's easier. It's my recommendation is it's a smoother process if you apply for a bond, you're granted a bond, and you have it in your back pocket, as opposed to winning a contract and then coming to someone, a broker, myself, and saying, hey, I need a bond in 3 days. This project is going to set off. It's going to kick off in those 3 days. Now that doesn't really put anybody in a good place. It doesn't put the broker in a good place, the surety company in a good place, you in a good place, because now you're scrambling to get a bond that you needed when that could have been all done previously. So where can they hurt you? Where can bonds hurt you? So understand that it's a double-edged sword. Potentially high cost. Again, if you don't properly qualify for a bond through a surety company, you might be asked to put down collateral on a bond, and we're talking about a $10,000 check, a $30,000 check, something that's gonna hurt into your cash flow, because you're not transferring those costs efficiently. So, you hold you accountable. So good and bad. It can land you in litigation and dispute over your performance. The contractor, you have to provide your own attorney and defend the bond company. And then if the surety company decides that you're in the wrong and they pay a claim, they're going to force you to reimburse them. That's why your personal financial assets are tied to a surety bond. Your company financial assets are tied to a surety bond. So when you apply for a surety bond, it's almost like a line of credit where you're saying, hey, I have all these assets, I have capital, I have equipment. I'm going to put this on the line, and you, surety company, give me that bond that I need of $1 million, 2 million. And bonds can start as little as 100,000, 200,000, 400,000, 500,000. All depends on what kind of what scope of work you're bidding on. So the different type of bonds, you have your bid bond. Your bid bond is something that is going to be given to you so that you can start placing it for a bid, and they're placed in good faith. So you're saying if you place this bid bond and you are awarded this work, then you're going to be transferring that over to a performance or a payment bond. So there's typically no charge for bid bond. So another funny story: I had a contractor who qualified for a bond, was given bonds, and they were under the assumption that for every bid bond that they placed for a bid, that they were going to have to pay for that bond. So their eyes got really big, and I said, no, that's not how it works. You can use as many bid bonds as you like, but as soon as you're brought into a contract and it shifts to a performance bond, then you'd have to pay for the bond. So bid your heart away. You're qualified, you've got bonding capacity, so go for it. So the performance bond. The performance bond is the next step. You submit your bid with the bid bond. You are told that you win the contract, one of the best feelings, $2 million contract. Now you let the surety company know, and it becomes a performance bond. So again, it protects the owner in case a contractor fails to perform or is unable to deliver the project per the spec or the contract provisions. If a contractor default occurs, the surety may offer a financial, technical, or managerial assistance to the contractor in order to complete the project. A payment bond just assures the subcontractors, laborers, and materials suppliers that you'll be paid in event of a contractor default, and it prevents the subcontractor from finding a mechanics lien on the project. Again, there's no cost for the payment bond when it's issued in conjunction with the performance bond. Union wage and welfare bonds. This is for anybody that's looking to become union. They would have to go ahead and apply for a wage and welfare bond. It's essentially a guarantee that says if I go defunct and I'm delinquent and I can't pay my wages, my anything cost related to the employees, union employees, then the wage and welfare bond would kick in and pay out as needed based on that amount. So it's something that is sometimes a roadblock for folks, and most contractors end up issuing a big fat check saying, here's $20,000. If anything ever happens, you can cash this check. Now you're out of the whole $20,000. Your cash flow is disrupted a little bit. By using a wage and welfare bond, you're typically at 1 to 3% of that cost. So again, they're they're great tools to use, but you have to be careful with them, and you have to understand how to access them and how to unlock them. So the cost, I did mention 1 to 3%. It all depends. It all depends on the financial strength of the company, the relationships your broker has with the surety companies, and typically our clients pay between 1 and 3% based on the contract amount. And bonds are due. That amount for a bond is due before the project even starts. So if you're looking to bond a $2 million project and it's at 1%, then that 1% is due before the project takes place, and then you're bonded. You kind of have to factor in what that cost is so you understand your pricing. The higher the contract value, the lower the average rate. So again, it's at a 1% on a bond, even the largest bonds, it's manageable. It's a cost that can be managed. However, if you don't have a strong surety partner or a strong broker, that 1 to 3%, I've seen anywhere between 6%, 8%, 10%. If a- if you can't qualify for a bond, there might be a situation where you've got to put down collateral, you know, 30% collateral, and then the bonding company would go ahead and pick up the rest, which we're talking about a big chunk of money. So my suggestion is always, if you don't have a bonding program, see what it takes to start one, get the information needed, and basically this is what's being reviewed when you're talking about getting a bond set up. So again, I mentioned it's like a line of credit. Insurance, any insurance company, not any insurance company, but eventually you're gonna be able to obtain a quote for whatever you do, whether it's excavating, demolition, yada yada, any type of service that's being performed. There's gonna be a carrier out there that's going to be able to provide you a quote. That is not the case with surety bonds. There are contractors that might have filed bankruptcy 2 years prior, and they're automatically disqualified from a surety bond. There could be where your financial statements, they're a hot mess. There's no capital in the company. There's no line of credit. There's basically the underwriter looking at this as a high risk. So they might just say, you know what, we're going to pass on this. So typically, items that they're asking for are a balance sheet for the company, an income statement, a statement of your retained earnings, a work in progress schedule, and accounts receivable aging schedule. These are kind of like the basics that are used when underwriting. Here's what the banks and bond companies scrutinize when you're asking for bonds: your profitability. Do you have a history of making money? What's your work in progress look like? Have you scoped out work for the next year, next 2 years? What does that look like? How much money is that? What's your balance sheet look like? Do you have cash? Do you have working capital? What's your net worth? Your debt, and your bank debt and bank availability. What is your aging account receivables aging schedule? How many of those are over 90 days? Now, if you start having a bunch of debts that haven't been paid over 90 days and they lead into 120 days and 180 days, surety companies look at that like, hey, this company is, it's floating, it's getting by, but there's so much money that's due and they're not collecting. That's a red flag. So we always encourage our contractors, if you are owed money and it's something past 30 days, past 60 days, whatever you can do in your control, go after that money. Get paid right away. Show it on the books. That way, your account receivables have a great average between 30 and 60 days. That'll give you the green light to be able to make a surety underwriter happy. So that's just another suggestion that I would recommend. Personal notes payable, distribution to owners, timely financial reporting, any underbillings, overbillings, that'll be showing on the work in progress schedule, and your job profit fee, that's also on the work in progress schedule, which we'll review in the next slide. So um, having a strong accountant, having a strong financial team is very, very important for a construction company to continue to grow. You need someone to be able to look at your finances, give you an honest feedback, be able to deliver that to the underwriter in a professional manner. Whoever your accountant is, make sure that they have experience in construction, in bonding, in work in progress schedule. So it just separates you from someone who looks like they're just starting off to a more advanced, sophisticated company that's using an accounting firm that specializes in construction. They know how to prepare the documentation that the surety companies will need, and they'll know how to deliver them as well. An accounting method in which the revenues and expenses of long-term contracts are recognized yearly as percentage of the work completed during that year. So you want to start incorporating expenses of revenues and expenses of long-term contracts, so you can paint a broader picture of how your company is doing and how profitable it can be. And it's the most accurate way to measure revenues on uncompleted contracts. And then also, most importantly, it's preferred by bank and a bonding company. So that's the importance of of having a strong accounting partner for your firm. So what is a WIP schedule? A WIP schedule is a work in progress schedule. It's a supplementary schedule along with the financial statements that use a percentage of completion method. It shows a financial snapshot of the contractor's uncompleted contracts at a specified date. So the work in progress schedule may be required by your bank, your surety company on a monthly, quarterly, semi-annual, or annual basis. It's not as useful for any quick turning projects, but important to track completed jobs. And again, you'd want to consult a construction oriented CPA who understands a WIP schedule. So what does a WIP schedule look like?
Jose?
It's yes.
Hi, just want to let you know, in order to leave time for questions and survey at the end, we've got about 10 minutes.
Okay, great. Thank you, Natalia. So, work in progress schedule. This is what it looks like. The items on top in red are essentially all you would plug in into this calculator, and everything else would be calculated for you. So, what was your contract amount? What was your total cost estimate? What are your costs to date? And what is your bill to date? So again, you want to see that you're billing on time, everything is up to date, and you don't have straggling payments. And again, I understand sometimes for subcontractors that's out of your control, but whatever you can do to collect money on a timely basis will help your cause in the long run. So plugging in these numbers, you'll see that your contract amount, your cost to complete, your total profit estimate, and your profit percentage will all be would be automatically calculated, and you'll be able to paint a picture to the surety company saying, hey, I'm profitable in all my jobs, I collect them within 30 to 60 days, most of them are complete. I'm a good risk for you. So four things again: contract price, estimated contract cost, cost incurred to date, and billings to date. And the key formulas for a WIP schedule: gross profit earned to date, future profit remaining, estimated gross profit on a completed contract, the percentage complete, revenues earned to date, and underbilling and overbilling. So that's surety in a nutshell. There's a lot more we can dive into, but for the sake of time, I'm going to jump into a safety program and safety culture, and how you get this started. So one of the biggest misconceptions that construction companies have are, well, I don't have enough money to develop a safety program. I don't have the resources to develop a safety program. I don't have the money to hire a full-time safety consultant that would help me with this. My rebuttal to that is, you can start implementing the steps and the building blocks to have a safety program without necessarily having to invest. Safety is about a culture, it's about a mindset. So here are four keys to developing safety programs. And these are the four things that you should be looking at and different ways that you can implement them. So number one, education and programming. You hire a new employee, if there's a safety training, a safety manual, safety training manual that they can review, let them review that. You can start creating safety committees. You don't have a safety supervisor per se, but you can create committees that can help you with education and programming. And then incentive programs, those should be based on proactive goals. Hey, we went 30 days without any type of claim, pizza party time. Contractors have different ways to incentivize their employees to begin thinking about safety, to begin helping one another and protecting one another and making sure everybody goes home at night protected. Safety programming, responsibilities, all levels of employees need to be aware of, and all of them need to be accountable when it comes to safety. So you have to discipline, you have to discipline consistently, enforce process. So there has to be written in your safety manual, hey, if strike one, strike two, strike three, if you get strike three, we're going to terminate you. Now you've absolved yourself from any type of possible lawsuits, because in your safety manual you specifically stated that anybody that that violated the rules 3 times was out. You've documented each time, and you're good to go. You want to discourage shortcuts and unsafe behaviors. And safety culture starts from the top down. So if the owner, the CEO, the president, If they're walking around the job site, no hard hat, and everyone else has to wear a hard hat, that sends the wrong message. That says, hey, I'm not invested in safety, but you have to be invested in safety. You flip that around and you say, hey, the owner needs to be wearing a hard hat, have to have proper PPE, and those little things leave signals, they're messages that where all the employees in line will follow. Well, if so and so has to follow the rules, then everyone else is following the rules. So that programming is essential so that you create that proper safety culture. Now, after the education and the programming, you want to evaluate and you want to constantly be monitoring. So your hiring practices, who are you hiring? Is there a formal application process? Are you doing any pre-hire drug screening? Are you doing any capability testing? Are you doing background checks? Are you checking out their MVRs? Are you doing integrity testing? Some of the biggest complaints are when it comes to safety, when it comes to claims, you might just have hired the wrong person. You've hired a serial employee who's has a reputation for filing work comp claims. Didn't do your due diligence. They came referred by someone who didn't know their past history. Now all of a sudden you've got somebody that's been on the job for a week and all of a sudden has filed a claim, is out of work, and yada yada. So those are the things that evaluation and monitoring are very, very important, because safety and the culture and limiting claims all start before you even hire someone. So do your due diligence there. Don't be shy, and then always talk to somebody who is in charge of HR, just to make sure that you're doing the proper steps. So the last step, and something that we've been pivoting to, especially during COVID, especially during this time, is engaging your employees for their health and their wellness. Are you doing ergonomic training? Are you doing on-site evaluations? Are you having your guys stretch before they hit the project? Are you spending some time to make sure that they're getting loose? We've got one contractor, uh, big GC, who requires, as part of their safety program, and any subcontract that works for them, all the guys must stretch for at least 10 to 15 minutes before they even start. Yes, they're getting paid while they're stretching, but it's going to help you in the long run, because you're going to have folks that are a little bit more limber, loose, and they're going to be able to work more effectively. If you're working in an environment where there's a lot of dust and possible, silicone exposure, anything that's where it's an unsafe environment, are you using the proper air purification systems? Are you using the proper vacuums? Are you making sure everyone has earplugs so that their noise are monitored, so their ears aren't affected? Hazard communication. Let everybody know, hey, this is going to be a very dangerous job site. There's going to be a lot of movement. Let's make sure that we understand what those hazards are, and we identify them. And then wellness programs. Are you incentivizing your employees to drink water, to take care of themselves, to take time out for themselves, to practice mindfulness? Those are things that you can start, you know, encouraging your employees to really take care of themselves mentally, so that they're efficient for you in the long run. And one of the kind of scary statistics are, out of all the industries that we're in, construction has the highest suicide rate nationwide when it comes to employees taking their own lives. And a lot of it is, a lot of construction and workers and employees like to keep things inside. They're very bottled up, and they don't have these outlets to be able to really work on their mental health and their wellness. So it's very, very important, and small steps that you can implement for your safety program. I'll leave you with this last slide. It's maximizing your broker partnership. Your broker agent should be helping you in these areas. They should be reviewing your policies to make sure there's no exclusions that can, really, really hurt you when it's time to file a claim. If you've got workers' comp claims that are open, they should be able to review those and lower the reserves, which means the money that's set aside to pay for any medical damages. They should be introducing you to primes. They should be introducing you to owners. They should be introducing you to their other clients, so that you can all develop a working relationship. They should be able to help you with your first safety program, putting a safety manual together. When it comes time for your workers' comp audit and your general liability audit, two big pieces of a construction company, they should be able to really review that, sit down with you, and let you know whether those costs are justified or if the insurance company has made a mistake. 30 to 40% of the time, it's the insurance company making a mistake and overcharging the construction company. Modification, safety scores, EMR scores, forecasting those, benchmarking your cost against competition. Where are you compared to your peers? Are you paying an arm and a leg, or are you underneath and it's making you very competitive? You should know where your competitors are, and a broker can help you do that. And then when we discussed developing your first bond, helping you grow with your capacity, and essentially opening doors for bigger projects. Us as brokers, we want to see construction companies succeed. We want to see you take on more projects, but we also want to make sure that you're minimizing your risk, making sure that you have the proper pieces in place so that you can continue to grow, but without any headaches, distractions, accidents, lawsuits, and whatnot. So it's in our best interest to work together. And that's it. This is my contact information. Again, we are based out of the Chicagoland area, but I've got clients in Wisconsin, Indiana, essentially the Midwest, and we have carriers that would be able to write coverage in all 50 states. So my office number is here, my mobile number, my LinkedIn, and then if you look at my speaker profile, I make sure that I linked up all my social media channels there as well. So thank you. I know there's a couple. If there's any questions, I think this would be the time. And I'll turn it back to you, Natalia. Thank you.
Thank you, Jose. That was very insightful, and it sounds like a very essential part of a business. So thank you. That was really informative. I don't see any questions in the chat box right now, but please don't be shy. Let us know if you have any questions. Also, I am going to be posting a link in the chat for our session survey. Any questions? If not, then Jose, if there was anything else that you didn't get to mention that you want to be sure that you do, please do take this time to do that also.
Oh, thank you, Natalia. So I think I heard it one time. It said, if there's no questions, that means that I explained everything to the best of my ability. And that's a good thing, right? Because it doesn't leave any room for ambiguity. No, I just say, connect with me as well. I am connected with a couple of training programs, a couple of partners. We help companies how to bid, how to improve on their HR, their safety. So I always see myself as a resource, especially for any DBEs, MBEs, or WE companies. I live and breathe in the space, so feel free to reach out at any time. And thank you once again for the opportunity.
Thank you. Thank you for those tips too. And you had mentioned, tips for saving businesses money and how to put together, the documentation and details necessary to share with someone like you and for insurance companies. It was a lot of really good information. So thank you.
I appreciate it.
Janine said, great information, Jose.
Thank you, Janine. Now, would I be able to share a copy of this presentation with the attendees? Or this is going to be recorded, right? So they can review it.
It is going to be recorded. If you want to share a copy of the presentation, there's a way to upload it, and you can send it to me, and I can do that too.
Oh, great. Okay, then I'll go ahead and send it to you. And if anyone needs a copy of it, especially with the tips, I know we had to fly by some of the slides. Feel free to refer to it as needed.
Great. And attendees, please do. There's a link in the chat for our survey, so please do fill that out before you go. Tiffany said, thank you, Jose.
You're welcome, Tiffany. Thank you for attending.
Leah said, thank you. Also, the common mistakes and the contract language stuff, that was really interesting too, because I think, if a business owner has not had anyone look over their contract, for legal or professional advice, I can only imagine that there's, just room for ambiguity and room for improvement in some of those that, if at least, from my experience.
Well, the common perception is that the contract cannot be touched, it cannot be altered in any way. And what we find is that that's not the case. There's always, you know, room for a little give, a little take. So
Right.
it never hurts to try to push back on any of the requirements, any of the contracts. Again, you're just protecting your own right, protecting your own company. So you have every right to do so. So as DBE, MBE, sometimes the mentality is let's not rock the boat because we don't want to lose this contract. I've
Mhm.
seen folks walk away from contracts because it was not in their benefit whatsoever. Lo and behold, another contractor takes on that contract, something happens, and now that contractor is no longer in business. And the
Mm,
contractor that said, I'm not taking that contract is still flying high because they avoided those pitfalls. So
mm,
having a construction attorney, someone that specifies in contract review, is going to be key to making sure that you avoid the pitfalls of a bad contract, and not necessarily with the DOT, but just in general while you're
right,
doing
right.
projects.
I think business with other businesses, absolutely.
Yes.
Janine, thank you for your email. I'll be sure that we get that shared with you. And I know there's a way to attach documents to the session, and I'll upload that um, after the session. Well, if there's no other questions, and if unless you have anything else to add, Jose, we could end the session.
Great. Okay. That's
Great.
that's all I have. Thank
Okay.
you everyone for attending. I appreciate it.
Great. Well, thank you everyone for joining us. Please do fill out the survey, and I'll post Jose's presentation online. Thank you.